Hello and welcome, as today is the 28th day of August 2019. My name is Derek. This is the Money Charts channel. Like always, all bets, trades, and of the like. That's within each's own risk and their own reward. Going to go over gold and silver. Not too much to go over as far as the charts, as I have recently done so. I'm going to present the Silver Eagles charts as far as how many have been sold minted since the onset of the Silver Eagles. Haven't really done that in a couple of years now. And then I'm going to talk about buying that of the precious metal. So let's get started off within the gold charts. On the monthly chart, the long term, as we are finishing off this week, the final day will be Friday for the month. And most significant decisive move up to pierce above this Fibonacci level as expected. Still trying to figure out what kind of level of resistance we're going to have at this point. Do we have really any at all in the monthly chart? It could be a little bit of a wait. But the next key level of resistance comes in at 1669. I'd expect it to go above that. And as far as support on the long term, as deep as back as where we came from, would be in at 1321. As far as where we see it on the daily term, there's more shorter level or shorter term as it is. All this great support here about 1493, but for the last few days has been holding and staying nicely above this previous resistance level that it had in the middle of August, and really more importantly above the key significant Fibonacci. So short term, we're seeing support on this right now. But long term, it's still, of course, whether it's a little bit above or a little bit below, it's all about the same. As far as the 3 hour term is concerned for today, it's got a productive setup as I'm looking at it. We can see how it broke above here earlier. Nice little consolidation. Small breakout, lower high to this, but higher low here, coming back to where we came from, this level of resistance. And over the last 2-3 periods, how it's managed to get to and above the 18 average of highs as it is. Even within this pullback, we can see that it's marginally gotten above this high and is pulling back to where we came from. And therefore, on the single hour term time frame, if this 18 average of lows gives in, that's definitely a major level of concern. But it does look as if that this thing is poised to get above and at least test this level of resistance, and breaking such have well, it's probably en route, of course, to the next key high, and of course 1600 height change. Moving on to silver, and for its month right now, it's up 13%. And other months before, I mean, there hasn't been too much spectacular at 27%. But as far as this is concerned right now, exitation of the 18, which is the second time this has happened since, of course, back here in 2016. And obviously, in such like this, we can see just on this around 16 or so is like a must hold area. 18 average of lows, of course, should rise to and above that number as it's going. This has been a most certainly noticeable clear break above. That's a big thing on the more, well, this is like midterm or whatever you want to call the 3 day chart, but nicely above the 18. And it's kind of like, technically speaking, it didn't correct to the 18 through time, but I mean, close enough. We do see here that after making this high, it had a couple sideways pause days. So, no big surprise that it has this huge day yesterday where it went up 6 2/3%, breaking this level of resistance and continuing on further right now, up about 1.17%. And that's for 3 days, by the way. So when I say yesterday, I meant last period. Yesterday, I was thinking, man, it didn't go up 6% yesterday. Yeah, it went up 3. But over the cumulative days, it goes up 2%, then it goes up 1.5, up 3, and so far today, it's up another percent and change. And nicely leaving, of course, the 18 average of highs, and well, getting above this, and most certainly a good clear break above that level of resistance on its 3 hour term, just continuously having a grinding extended move. Because when we look at the situation of this spots, you have this move up, grinding higher as we did here, and then nice little double barrel move here, or 2 periods to go up, and then this consolidation period is just, I mean, it's like, this is better than normal because it's barely a bit better than sideways. Well, this isn't a good or ascending rate of ascent. It's just got a controlled up move. And what's going to change it? Well, it could go sideways. That's one way. And yeah, it could revert down, and you could break the rate of ascent and just have the huge types of moves. And when you have stuff like that, that's not that big of a shocker when it comes down to it. Of course, I'm not saying that's going to happen, but as far as the gold to silver ratio is concerned, it's moving pretty wildly, and it's breaking down as given that silver going down is over silver overperforming gold. On the monthly, it's just okay. Yeah, just a test of the 18 average of lows. But last month down 5.56, up 3 or down 3.62 so far, and much at the very upper, well, not quite upper end of this range, but it is back to this area now where it came from. But as we look at this on the daily term time frame, there was 8 consecutive days down of decent sized gains, and now we're 3 consecutive days down of large gains, down 1.26, down 1.97, and right now down 1.25. But as we can see, as it was leaving this, and I was bringing that out, that okay, this is that spot. I'm like, oh, I really hate predicting what happens here because this is not a surprise to see happen. You have the spot like this, the lower high, the concisive, nice move in here, or the as the move is to correct the lower high like this and leave the 18 and such. Oh, that could be deadly breaking below what it is in the sense of okay, large, big red candles down. I mean, it could have just found support here, just hung in there, then did it. It could have came up and resisted those facts. Those are the key ways of getting there. But the fast move, as we can see in here, 8 hour, just continuously red candle moves down, every single one of them. And there has been the only green candles recently. Well, the last one here would take us back to August the 27th, and this is on the 3 hour. That's not much of green candles in here as it is. So the ratio is still at 84. You think of what it's worth. You need 84 ounces of silver to get 1 ounce of gold. Okay, now let's take a look at the Silver Eagle sales. And this is reported from their website. And it's the sum of the last 12 months. And I like to use 12 months because, well, January can be really high and December can be really low. And, well, the last 12 months has every single one of each calendar month. So it gives you what it's done over the last year over year. And yeah, I mean, noticeable on so many frontiers. We'll go from it from start to finish and then go back and analyze it some more. So early on the dates, the late 1980s, they start out. 1988, it completed its first year. And of course, early on, people wanted to get them, and then the early, okay, fade out, if you will. But the trend of lower highs to lower lows to the late 1990s was most certainly in play. Then the trend changed. Very microscopic rally, keeping the market sideways, but doing it at an upper level, doing it at about resisting a little over 10. Doing so from the end of the last millennium to 2007 to 2000, and then that's when it all changed big time. Now, fundamentally speaking, that was an interesting time frame. At least on YouTube, there was a lot of information starting then. Stuff like money as debt. Peter Schiff was becoming more popular. At least if he wasn't too popular before, he was starting to get really popular at this time. There are so many individuals at that point which were talking negatively, will state, against the fiat debt based monetary model. And you could say for good reason too. But it obviously started a huge run up here as it went from people buying on average 8, 9, 10, 11 million a year to 40. Little bit of a pullback above 30 and then making it up well past its high. Because as we can see here, when did this happen? This was like 2015, 2016 it topped. And that's when they were doing on average over 50 million ounces of silver. And for a while they were doing 40, 50 consistently. But I mean, a huge fall afterwards. It stopped over the last this year, but huge fall. In fact, markets coming back to where they came from, this low is technically lower than the first 3 months of 2003 on a year-over-year level. And again, I like to use that because everyone says, "Oh, you got if you start from January, February, you get those great data." Yeah, but every single 12 month has a January and a December in it. And of course, January gets more of a sales because people want the new mintage years. And when I look at this, the big reason I do not like this chart, but I wish I had the data or the charts for where I would want it, is both because this is just silver eagles. That's it. If I wanted to get a real good, accurate data set, I want to see how many ounces are sold, or whichever term, kilos, which millions of ounces, thousands, I don't care. But just how many have JM bullion, silver gold bull, how many of these big and decent, medium and large size silver dealers been able to sell during the last whatever data they have in ounces, or again, whatever weight of measurement they choose, tons, whatever. And is it looking anything like this? Because I don't think it would. I really don't think that the fall, that there'd be a little bit of a fall, sure. But amongst this, I've heard so much before, how much of it's true or not, that it's common for the US Mint to even run out. They did in February this year, within these levels here. They ran out. And they've ran out several times before in the past, where they've had to suspend selling over an intermediate period of time, maybe several weeks, definitely days. And in such, I've heard getting coins like rounds delivered to them, blanks, if you will, from the Sunshine Mint. And well, then they would just put their eagles, their designs on themselves in their factory. But yeah, myself, I would rather buy a Sunshine Mint for a significantly lower price. And if I'm going to pay a little bit more in a premium and pay what the Eagles go for, I'll just find something else around that price instead, which I've done myself quite frequently. Now, as a Canadian, I see no need to really ever get Silver Eagles again. I haven't bought a Silver Eagle since I don't think back in like 2014, 2013 even. It's been around that time. I can remember going into the mall that I went into and I bought a couple. They had a little silver dealer in the middle of a mall, and I'm like, yeah, I looked at it, and I think I bought two Eagles. That's the last time. And I had a situation happen back in 2011 when silver was, I think it was $24.75 ish Canadian. And the dealer comes up to me and says, "Yeah, I'll sell you these Eagles for 25." And I'm like, "Well, if you give me a deal like that, sure, I'll buy it now." But it's not like I'm ever really going to get those kinds of deals. So, being a Canadian, I got a few maples, and they're cheaper than an Eagle is as it is anyway. But getting your own country's coins, I think, is a pretty decent idea. However, again, that shows international interest. The fact that I don't like it, I gotta think is probably not that good for this particular make. And then if you're looking to be a big time buyer, again, there are other such ways in which you can be buying, and you're talking about buying maybe 10 ounce, 1 kilo, 100-ounce pieces. And you're talking about, again, maybe you could say, well, maybe you want to buy, say, 1,000 silver eagles or over 1,100 sunshine mints, and they could have been made by the same. So I think a lot of that really does come into play. Another big reason why I'm not a fan of using this as a mechanism. But I don't have the data. I mean, I know those big companies, they would know for sure exactly what it is. And I'm surprised I haven't found it, at least, or if it's, I'd be surprised if it wasn't out there. But the actual real demand would come in better on a mechanism of that kind of level. And yeah, so That's it for me. Now, as far as the scrap silver or constitutional silver, as far as historic coins that used to be in our actual change, you put in your pocket, in your wallets and such, they used to have coin spots to put in your wallets. After all, those silver quarters and dimes did need protected back then. And they do needed protected today, too. At least those old ones definitely most certainly do. I'm not a huge fan of them. But again, if I can get them at a really good price, I'm most certainly a fan of them. And I would rather get 99.9%, 99 or better, fine silver in the bullion form, rounds, coins, bars. I love all that type of stuff, but not a big fan of the like dollars and half dollars. Although Canadian dollars are pretty cool. But again, I'd rather the triple nine. I don't buy on eBay, and I haven't bought a silver. I haven't bought silver on eBay since probably 2009. It's I just have it's just don't like to buy on eBay. Rarely ever use eBay as it is. I haven't used eBay now in probably 4 years for anything. But anyway, that'll be it for today's video. I'd like to thank you for tuning in. As now that this has happened, a new run in market, things can happen much faster. Volatility increases, all that type of stuff should come around and play in that of reversal of trend. It does need to get above this previous high to really start for me to be really fully convinced that this thing, the wild moves, would be on the way. But yeah, 21 is definitely a key level of resistance. That might be that. It's a potential level. And even on a bullish point, it could be resistance. Pull back to like 17, 17 and a half, or 18, whatever, just a nice higher low. Then it goes back up there. And I'd be saying if it were to go from here to 20, back down to 18, and then back to 21, and again, I'd be like, okay, this thing gets serious. It's probably going to break at high probability odds, all that stuff. But usually, as it goes, whenever I have a spot where I see a key high, a good correction, and this was very good as far as higher low, matching low, pierce, whatever, but good time correction, all that stuff. And then when it comes to that level, it seems more times than not it does it way overextended. So it wouldn't surprise me if this thing just keeps on going because that just seems to be typical. And then again, it's that spot I don't like, as I mentioned within the gold to silver ratio, because at least as far as predicting market movement, because I realize it could be a key top on a lot of coins where I just see it like it never goes back again or it never goes back for a long time. I wouldn't think that to be the case. In fact, I'm going to continue on further with I think the chances of it doing stuff, and yeah, that's one of the things. And maybe you have a good bullish level, as I was mentioning. You go over here, you come down here. Maybe you just hang in there and you just chop around it, or you resist it, but you don't go down too much, meaning you go down to 19 or 18 change kind of deal. Okay, and then maybe you just break above it and go extremely high usually after that, because if it were to do that, it wouldn't surprise me if, say, one day it was 21, and then maybe a week and a half later, it's like 28. That wouldn't surprise me because I know that's normal market movement. So the percentage, okay, excuse me. What are the chances? What are the chances that I think silver will break $21? And I want to be literal here, and I'm using my own definition. I don't think there's no chance, no chance silver's going to break 21. And I say that in a creative way because chance is like oh, something of uncertainty, something greater than 0% likely and under 100% likely. See, I think it's 100% likely. When and to all that stuff. And I've been asked that in time. Oh, when will all this stuff happen? When will silver go to 50, break 50? When will it go to 200, 1,000? When will the dollar collapse? Well, I'm already way off, because if you would have asked me those questions back in 2009, when we were at $18.38 for silver, and it was in 2009, I would have said we would probably be at like $400, $500 silver by 2012, 2013, all that kind of stuff. And I remember saying this too, by the end of this decade, which now has a little over 3 months to go, it'll be the dollar game will be over. Well, no, that's wrong. So it could take a while. It has been a while, obviously. And that's, again, one thing to keep in mind, that the longer it takes, that the faster these big moves can end up coming into play. But it is realistically possible that we have triple figure silver over $100 in 12 months. And it's also possible that in 60 months it doesn't. That's when we next see 50. I think it'll probably be in between that or whatever. It's going to be. I don't think we'll see 50 next year, but we could. I uh, We'll see how this goes. I think it will take a little while. I mean, I wouldn't be surprised if we come up, have some resistance, and it takes more than 12 months to get up there. But then time will tell. Anyway, thank you for tuning in. Have yourself a great day. Bye bye.